All right. Good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. We're going live this morning because tomorrow I will be across the coast helping move my mom back over to the East Coast simply because the hurricane damaged her house too badly. So we're going to put her back over here. So that's where I'll be tomorrow morning. I won't be trading or anything. I'll be leaving bright and early. So I figured we'd go ahead and knock out tomorrow's stream today. Plus, we have a little bit of movement. We did break out of the descending trend line on Bitcoin. Let's pull it up over here on the main page. What we're currently watching here on the S&P 500 is it's bearish today, which is normal. You had two massive bullish days, so getting a pullback is okay. The problem is when does it stop looking like a pullback? Well, we're going to discuss that today, but right now we are long on the monthly support or off of the monthly support down here on Bitcoin. You can see that we've been trading down here since 7:40 a.m. It is 8:40, so a solid hour, getting ready to close that position out when the S&P 500 ultimately did make a fresh daily low. Bitcoin had already made that low. So basically what I want to see for me to stay in this long position on Bitcoin is the S&P 500 to trade away from the low of day. If this was going to be a liquidation break move, you make a fresh low of day and then you move on. You can see that for 15 minutes there, you were moving on, but you're coming into trend line resistance. Let's pull this up over here and I can show you exactly what I am talking about. So I do have a pitchfork here just kind of outlaying this pattern, and I had to clone a trend line here because that's where I was kind of looking for the S&P 500 to come into resistance yesterday. But you can see with that big move yesterday, you did take out this trend line resistance with a closure. Down here, this white line, that is last week's high. So you can see just how big of a move that was. For 2 days, you completely wiped out and engulfed all of last week's down move. You did that on Tuesday. Today is Wednesday. Is this going to be the high of this week? Well, here we got what we really have is nothing, right? Everybody got all hyped up because the RBA came in dovish, not super uber dovish. They were going to raise 50 basis points. They ended up going 25, but they have a different scenario than what we have over here. The Fed has already outlined the road ahead already. So these two big bullish days yesterday could end up being sold into, but the technical basis that we have with Bitcoin right now is that there is a breakout. The breakout is legit, but we know traps exist, but you still have to take heed to the breakout, right? You still have to look for positions in the bullish direction because you did get a little bullishness. We did make a trap. If you remember Sunday's post, I outlined exactly what we were looking for this week. That trade has played out to yesterday when you took out the high of last week. All right, so you have gotten bullish continuation from the bear trap weekly that was made 2 weeks ago. You did take out that high with last week's candle, and with this week's candle, you have taken out that high. So you have been making higher highs for the last 2 weeks. So you do have to come into today with just a little bit more of a bullish sentiment than bearish. We are overall still bearish, but as long as Bitcoin is trading above monthly support, we're going to be looking for bullish entries because we are day traders and that's how we roll. All right, so you can see here S&P 500 struggling intraday with that little bit of resistance there. You did get above it, so I mean, all in all, is this what's holding down price? Probably not, right? Trend lines are subjective, we know that, but you know, price is going to do what price is going to do. And all we can do is position ourselves for what we think it's going to do. And then we use a stop for when we're wrong, right? We're not always right. All right, so let's get over here to the Mr. Bitcoin. I can show you exactly what I just discussed. You can see here we've been trading down at the fresh low of day for an hour. I do want to see price start to trade away from this, and I want to see it trade away from this with a massive amount of momentum. And we're not getting that. You can clearly see that the bids are outnumbered by the sells today. You got 7.7 1,000 Bitcoins sold. You got 6.27 thousand on the bid. So sellers are leading the day. You can see the point of control is up there, roughly around $20,200, and price is currently trading under it. The point of control is also on the top edge of the daily range. So it does look like the sell side was the trade to take. And if you were awake during the London session, you could have sold into this move right here. Now, you weren't making a fresh high of day, but we do know that the London session oftentimes calls the lower high of day. Since you didn't make a fresh high of day, you could have still sold into it. That was the only trade to take. There was no buying going on anytime in today's range unless people were buying this over here or even buying this over here. So price has completely liquidated most of all the buyers today, except for us. We're still in it, but just barely, right? This is where we entered at the low of day. All right. So everything is not looking like the way I want it to, but we still have 50 minutes until the open of the New York Stock Exchange. So are we going to see more sell side volume come in when that occurs? We'll just have to wait and see. We will be live for that, obviously, but we are looking for a bullish advance today. All right. So let's go to the weekly time frame. Let's kill the volume profile because, it's done its job. We know that the sellers are leading the day. We also know that the point of control currently is setting above. Oh, wait, before we go out to the weekly, let's go over here and look at yesterday's point of control because it's pretty astonishing where it is. You can see that the point of control here yesterday is roughly around the midpoint of yesterday's range. And I honestly thought that price was going to trade into here. We had an hourly support that we were watching here for early long positions, but didn't take it because price could just not get any kind of momentum going away from that level. There you can see you broke down with this closure, taking out support, and also with this push lower and the close lower, you took out the low of day, making this the new low of day. So what we need to see for this is we need to see this hourly that we're currently on get above hourly resistance. And it's still going to find a little bit of trouble up here because I want you to look at where the new point of control is. That's right. It's setting right at intraday supply. All right. And we know that the sellers are leading. So if price does get back up there, that will be my profit target for today. I will take profits, move my stop to break even, and leave, 1/3 of the position size on for any bullish continuation that we get, if we get any bullish continuation. All right, so that's the game plan going into today. All right, so let's go ahead and stop this thing here for moving. We're going to go out to the weekly time frame because you got to see this to believe it. All right, so this is the weekly candle that I was talking about. This candle right here, it closed below support. We know traps exist, but going into this closure, we also know that we were trading under monthly support. We hadn't closed under it yet, but we were trading under it. We have closed under it now, but we were trading under it, and we had also lost daily support. So you've lost your monthly, weekly, and daily support. You've literally lost all the supports that you have down here. So if the sellers want to take abuse or go ahead and abuse the bulls, they were situated perfectly for it, but we were looking for volatility to rise. Volatility has been compressed. You can see it on the 4-hour chart. If I scrunch this out, this is very narrowing volatility. So volatility had gotten to very low levels. We were looking for a volatility expansion. Volatility is not a direction indicator. It's not a directional bias indicator. It's directional neutral. It has that. It's neutral. So if it's expanding to the upside, whichever way price is going, then you look for that to typically continue. So if price is going lower, you look for volatility to expand and you look for lower prices. If price is going higher at low volatilities, then we look for that expansion to occur as the bulls have control of it, right? And that's what we were looking for. And basically what gave us that little tiny signal was the fact that we did close here below support, and then this week we took out that high, cementing this candle as a trap. All right, there is a video, if you haven't seen it, it's on the smaller channel called How to Identify Traps and then how to trade that. So this It wasn't the best looking setup, but basically what I told everybody in the Sunday live stream was we were watching $18,806 for bullish entries. As long as you're not trending away with hourly closes under that level, we were going to be looking for bullish entries there, expecting this week to have bullish continuation based off the fact that last week we made the close below a trap. So now all the sellers that were selling in this candle were trapped or stopped out, depending on where their stops are. That gives enough liquidity in the market to give bullishness a little bit of momentum. So here we are today, or here we are this week, Tuesday, Monday and Tuesday. That's all this was. Today is only a red day. So from this candle's high to where you currently are, that's your daily range for today. You can see here that you are pulling back on the week, but still structured very bullishly and all, well, not very bullishly, but bullishly, and also taking out last week's high. Now, the fact is that has me concerned in telling all of my subscribers and followers on Twitter to be careful. It is okay to take bullish entries, but you have to be careful and make sure you're managing your risk, because you did get bearish as soon as you liquidated last week's high. I mean, as soon as, right? There it is, boom. As soon as you got over it, you set in resistance, and that resistance held, and then price has been slowly trading down. Now, it's slowly. That's why I'm still thinking to myself that this is just a bullish pullback, and we will find support, but where do we find support? That's going to be the difficult problem that we have to deal with today. So that's what we're kind of looking for. Once again, we already have taken the entry off of the monthly support. And the way that I'm going to play this moving on forward into this week, maybe even into next week, is basically this. As long as we are trading above monthly support, which last month you took out, with September's closure, you took out monthly support. And September's high is all the way up there. So before this monthly candle will be considered a trap, you got to get all the way up to $22,800. And it is possible. You can see here that we just started a new quarter 5 days ago. And for the last 2 days, this is your entire bullish range here. The last 2 days have done this. So all this green monthly is just from Monday and Tuesday. Once again, that's when it started. So intraday, it is struggling down here, but the way I'm going to play it is if we're above this, be bullish. If we're below it, be bearish, because basically the RBA, just because they did what they did, it's not going to make the Fed change their direction or their bias, right? They want 2% inflation. What they have is 8.3% inflation. And in order to get that there, they're going to continue on the same path basically that they're on, which is we're going to raise interest rates until inflation starts to trend lower. Then once inflation starts to trend lower, and only then will the Fed make a decision. Will they pivot? It's unlikely, right? They're watching other data. It's unlikely that they're going to pivot until they have enough data saying that they should do that. Right now, you're at 8.3% inflation. This is their target. So please stop talking about a Fed pivot just because the RBA didn't raise 50 basis points. They only raised 25. That's not a pivot. That's not even dovish. They're still raising interest rates. That is still hawkish. They're just not as hawkish. But they're definitely not dovish. And our Fed isn't either. So the last 2 days rally, that we've seen could 100% get sold into. So please keep that in mind when looking for these bullish positions. All right. But we are situated for that. We are looking for it, but we'll see if it plays out or not. None of us knows the future. All we can do is position ourselves for what we think may play out. And we use technical analysis to do such things. All right, so let's get, all right, what do I got here? Got DXY over there, got Bitcoin and Bitcoin. We don't really care about Ethereum today. basically because we're already positioned inside of Bitcoin. Mainly what we're going to watch here is the S&P 500. It has already just made a fresh daily low. Bitcoin trading up off of monthly support. So, I mean, remember how yesterday when we were trading live, you kept making new high after new high after new high. That's not a liquidation break. That is called continuation. If you don't start to move away, like in the next 25 to 30 minutes tops, this is going to be downside continuation. Yeah, it could potentially find support in the middle of the day somewhere, but we don't really have many levels for it to do so. All right. And make no mistake, the S&P 500 is driving the marketplace right now. And it is based mostly, I would say solely, actually, if you want to get down into it, because of the 200 simple. All right. So that's probably the reason why you're getting such a big bullish bounce. You traded right into the 200 simple last week and closed. This week, you took out last week's low and boom, you got a bullish engulfing. But the thing is does this make buyers show back up? Is this a big enough signal to call in buyers? Will this cause demand back in the market? We know that there's a lot of people sitting on the sidelines with cash, but we also know that this is a Fed-driven market, and it has been since '08. If you just listen to the Fed and leave your own biases at the door, you would have been very rich trading in the direction of the Fed. The Fed will let everybody know when they're going to pivot. They will. You'll start hearing rumors. You'll hear one Fed member say this, and they'll say it. So it's not even necessarily a rumor. It's just not confirmed until the FOMC meeting occurs. But you'll start hearing rumors. Oh, we're not going to drop 75 basis points, or we're going to stop raising rates. That right there, yeah, that would be enough to cause the market to become bullish again. But we got to have that happen first. A 200 bounce, yeah, it's a normal place for people to be a buyer. But I do want to shift your attention to over here. I did post a tweet about this yesterday as well. The last time we had a massive bear market where the S&P 500 tested the weekly 200 simple, the very first test of the bear market, which is exactly what we did last week, was the very first 200 test. You did get 2 weeks of bullishness. And as you can see, that sell side came right back in. So if you close like this this week, then we'll know that there's a pretty good chance that we're still being sellers at resistance instead of buyers at support. All right. We got to make higher highs and higher lows. That's what the market has to do in order for us to change our bearish bias. You are still making, and you just made, fresh bearish lows on the overall trend. So, yeah, that's what we got right here. The Dow Jones Industrial as well as the NASDAQ all have made fresh bear market lows. The only one that has not yet is the IWM, which is also known as the Russell or the Rut, depending on what you call it. But same asset here. That's the only market with the low still in place. If we go over here to NASDAQ, you can see it right there. You did indeed take out the bear market lows. And where's Dow Jones? Right there. Dow Jones took out the bear market lows in spectacular fashion. Not only did the Dow Jones take out the bear market lows, but you also got 1 week of downside continuation. And as far as bullish engulfings go as being a bullish signal, they work best in a bullish trend. All right? Now, I know that's hard for some of you all to wrap your head around, but a bullish engulfing works better as a bullish signal in a bullish trend. So when markets climbing, a bullish engulfing works good. Now, here was back in 2020 when we had the pandemic, you did get a bullish engulfing weekly, and that ended up being a fantastic bullish signal. So that's why we're lending credence to the bulls for now, as long as that bullish engulfing stays intact. If you take out the low of the bullish engulfing, we're going to shift our bias right back to the downside. All right, so that's what we got right now. And it's as simple as that. You don't have to worry about anything else other than that. If we take out this week's low, then you're bearish again. But if you are looking to be a seller If you are looking to be a seller, where do you do that? Well, I don't think you can sell anywhere down here, not on the S&P 500, but Bitcoin's different. Bitcoin has a setup, or it had a setup last night when it took out last week's high, right? Last week's high. So those are good places to look for sell-side entries. Last week's high. If you're looking to be a seller, once you liquidate the last week's high, you could potentially be a seller. And you'll know when you're wrong if you make a fresh weekly high, all right? It's as simple as that. The trend line on the weekly here, you do also have, I've seen people talking about this on Twitter, that the RSI has confirmed a breakout of this trend. This is your all-time high trend line resistance, only off logarithmic scale, because on logarithmic scale, that trend line is nowhere to be found. Well, here, let me just show you. See how the trend line works off log? You got a long ways to go before you get, or on log, sorry. You got a long ways to get there. Off log, you're into it right now. And yeah, if you put a trend line from that peak to the fresh 2022 high that we shorted down to here, yeah, you have broken out. And yeah, you are getting bullish continuation from it. You are pointed up. But this will change if we close bearish this week. All right, so you got to wait until Sunday for Bitcoin to close this Sunday to give you an accurate reading on this RSI. Because if you close bearish, the RSI will not be sticking up like that. It will be sticking down like this. So you got to wait on the close before you can even consider that legit. And how often does an RSI, which is a lagging indicator, call a breakout on price? Not really ever, if I can remember correctly. Price has shown you that it has broken out above that trend line on a daily closing basis. So monthly support, trend line support needs to hold support. If you get under it, you have my permission to sell resistance. All right? It's that simple, guys. Here we go. Let's do it. I think if he was an animal, he'd be a bear. Yeah, I like that. But I am a Leo, so I think I'm more of a lion than anything. I am a Leo. So, yeah. But bears are nice as well. Let's go ahead and get back over here so we can check out what the S&P 500 is doing. I do want to keep a close eye on it. As like I said yesterday, they don't trade hand in hand identically, which is, you can tell that just by simply, you can see fresh daily lows over here on the S&P 500, and you've only done that once on Bitcoin there. So, but what we do want to see is we do want to see some bullishness start to kick in here. As the longer it stays trading near the lows of the day, the more chance it has to continue to break down. And as you can see, the dollar here in today's price action having a bit of a rally, or at least going up, right? But it's had a couple big days. We discussed the dollar yesterday. We were looking for places where it could potentially bounce from, and we found daily resistance over here. Was resistance. There's the breakdown. There's the breakout. So there's the first place you would expect a bounce to occur, and it did. I actually expected it to bounce up here at this support level at 111.20. It did not. It blasted right down through that. And, if it wants to roll over, I would like to see it at least not closing dailies back above yesterday's open. So if you get back above yesterday's open, then what you have here is trend continuation possibility on the DXY. You can see that it is so very bullish. And we have gotten nothing from the Fed that suggests that trend is going to change. So I think everybody is getting a little bit ahead of themselves on this bullish pop. That's just my opinion. But I will take the setups that are given to me for sure. S&P 500 pushing down to make a new fresh low on the day before the market opens. Oh, and let's do this. Let's talk about Twitter and Elon Musk, obviously, yesterday having a phenomenal bounce, getting halted after the bounce and not opening back up until real close to the end of the day. So you got halted here on this spike up. You opened back up for a brief 5-minute period, getting halted again and then not opening until later. And then naturally, Tesla took a big dump after having a fantastic bullish day yesterday. Just dump. And today, you're trading at the lows. Now, there is a support level that we are watching currently on Tesla that we discussed yesterday. It is the same price, and it is still intact, and it looks like 240.55. That is the level that we're watching. You could potentially be a buyer down there that would liquidate yesterday's previous day's low and the day before that. But you need to see it hold support. S&P 500 dropping, Bitcoin pushing back down to monthly support. This is a pretty good size move to the downside here. So we do not have a liquidation break trade on our hands. What we do have is bearish continuation for the day. At 9:30, when you get the New York Stock Exchange open, could it then bounce? Yeah, it could. But remember, you're fighting against the overall trend. The overall trend is bearish. You just had a 2-day rally. That is it. And yes, it was a big rally, but in bear markets, volatility is real. There went Bitcoin, fresh daily low, and liquidated everybody. Now, here's the thing. There is a link in the description for an exchange. That exchange is Bitget. This is a very good time for me to discuss this. This is what we call scam wicks. You can see it clear as day on Coinbase, which is an America-based exchange. Scam wick to the downside, making a fresh daily low. You didn't get that on Bitget, but now Bitget has dropped. But you didn't get this scam wick, right? You're just getting a lot of volatility here on Coinbase. Bitget did make a fresh daily low just now. So no scam wick there, but you still ended up taking out the low of day, which would have stopped anybody out if they would have taken that trade. So is it possible that you bounce now? Yeah, it is. But at the same time, how do you trade against that when you make fresh low after fresh low after fresh low? You're just throwing bad money after bad at that point. Just let the trend continue today. We'll see where it finds support, if it finds support. And I won't, but you will tomorrow have another opportunity to potentially buy Bitcoin. But just do it at a decent level. Do it at a level. Sellers really in control now, 8.917K to 6.482K. That's sell to bid. So the sellers leading the charge today, getting down below monthly support. I do want to see if it's able to hold this price. If it is, I'm going to have to switch my bias back to bearishness. We got to give it a little bit of a chance to, I guess we could give it a little bit of a room to see if it does actually want to continue to be bullish. And there is liquidation events that occur all the time. But if you come all the way back down to this old resistance here, you will have taken out yesterday's open, which would not look so bullish to me anymore. So we'll see if this ends up being a trap or not. If you start closing daily candles back under your trend line resistance there, then you just made a fake or false breakout to the upside, getting everybody nice and bullish, long enough for it to price to just come right around and continue the downside move. But today is, the last 2 days were nice and bullish. If you could do a fib retracement on last week's range. Since it is the week in question, you could do something like this. This week only. Don't go from the low, just this week only. Because that's the range you're in. And give yourself a couple fib levels here. The 50% retracement is the retracement level of which you could watch for the weekly range pullback. 618 is pretty much line in the sand. If you start closing dailies under the 618, I would say that your breakout was more than likely a trap, and you can look to sell resistance. For all you sellers out there, say today stops here or somewhere in here and then gets a nice bullish bounce in the middle of the night coming into the London Open session tomorrow morning. Where are you going to be looking to be a seller? Roughly right in there, 203.45. So if you want to still be a seller, you can be a seller on any test of daily res, which is also intraday resistance. If price gets back up to there, that's where you'll want to be a seller. And in my opinion, you don't want to see price trading above that. If it is going to roll over and be a sell, you would expect a wick into that level and then a drop almost instantaneously. So you're getting ready to liquidate yesterday. Well, not yesterday's low, but intraday, this intraday low here. Bitcoin doesn't have, like I said, your daily low, yesterday's low is a long ways away. Liquidating that would look disgusting. Yeah, if you got all the way down to there, you would essentially have taken out the entirety of that. As far as today's range, there is your open, well, not today, but yesterday's range. So that's your open. From there to where did it close? Right there, so there it is. You can see you've just pushed down into the 618 retracement of yesterday's range. The 618 retracement of yesterday's range is a decent place to be a buyer, but there really isn't much other confluence to be a buyer there. You do have an intraday support at $19,889. If you want to be a buyer there, you can. But once again, you're fighting the sellers today. I think if you go much lower than that, you're going to have something different on your hands. Your bullish breakout or your bullish rally is not going to be bullish. It's going to be bearish. And then once again, we will be looking to sell 203.44. But that won't be until tomorrow, probably around the London session. If you're trading up there or around there during the Asian session, then I think maybe leave it alone. But if you do trade up and then roll over around the 2 o'clock, 3 o'clock a.m. Eastern Standard Time, you're going to be wanting to watch for a wick of some sort up into that daily resistance. And there you could potentially take that short trade. If you're going to see downside continuation, of course. Nobody knows what it's going to do. And you've gotten a lot of stuff to look at right now just for the next couple days. You do have FOMC, non-farm payroll coming up Friday. And we do have news today. I wouldn't pay too much attention to any of this stuff over here, balance of trade, exports, none of that stuff. Canada is going to have quite a bit of volatility in it, Canadian dollar or the loonie. It could be why we're seeing a little bit of a move lower here based on that. Down here, you can see none of this stuff is labeled blue or red. Next big news thing you got today at 10 a.m. will be the ISM non-manufacturing PMI. And you've already made a fresh low of day and you're trading down to the 618 retracement of yesterday's bullish rally. That's a pretty big move lower. So I wasn't the only person looking to get long there. So was a lot of other people. That's a legit stop out, not a liquidation attempt. Your thoughts and explanations are great. Thank you, Big Boozer. Thank you for being here, my friend. Or Big Bozer, I'm not sure. Good morning, everybody. Good morning. The music hyped me up every time. Yeah, I like it too. That's a pretty good little song. I hope she's okay. She is. She's fine. She's fine. She's over here right now. She's all good. She just lost a few things, right? A few items. Items can be replaced. You can't. Well, she's going to be fine. Hey, if you have time, would you go over your rules on how you mark up channels, pitchforks on your charts, or maybe have a tutorial video? I don't have a tutorial video on pitchforks. I don't use them that often because they are so subjective. I mean, there really is no rule or, rules of thumb, if you will, on how to correctly place them. Typically what I try to do is I try to just outline what I think could be going on, see if it lines up pretty good. So for like in this scenario, just take the swing high right there. And at this point in time, this was 2022's low. And then this became 2022's high, right? So like you could do something like that. But just sideways price action is going to break out of trend lines. So like this breakout doesn't look like shit on the monthly. I mean, on the weekly, right? Doesn't look like shit on the weekly. In fact, this weekly close could basically say, yeah, it wasn't a breakout. It is a breakout on a daily closing basis only, right? This is Sunday, Monday, Tuesday, today. Sunday is the open of the week. So there's your weekly open right there. So basically, if you get down to there, you're not going to be bullish anymore on the weekly range. And then this isn't going to look like anything. It'll look like a fake out or fake breakout on the daily, but on the weekly, it'll look like a test and a fail, right? It'll just be a test of resistance and a failure of resistance. That's, if we were going to see bullish price action today, I would assume that it would have done it by now, right? Because usually when you have big moves like this, your retracements are very narrow. They're narrow. Like you'll get 1, maybe 2 days of bearishness, and then it'll go. It's hard to find one. Here's one where you got 2 days of bearishness, and then it went. Here, big bullish move, little tiny itty bitty bearish range day. You could have bought the open or the close of that candle. Naturally, you made money depending on where you took profits. And the same goes for the downside. There's 2 down days, big down days, 1 up day, another down day, 1 up day, another down day, down day. So when you're trending, if you're going to trend, you would expect the retrace day to be minor at best. Minor at best. You don't necessarily want to see it going much deeper into the day's range than the 618. I guess that would be my line in the sand. And you're currently there now. But I'm not going to buy it because I've already been stopped out of my long trade. So there's no point in taking another loss. The market's already not doing what I wanted it to do to begin with. So just because there's another indicator here doesn't mean that I'm going to take this trade. The trend line there, I mean, you got a little bit of confluence. And like I said, this is your last down closing hourly candle. So if you want to get long there, if you get back down there around in 10 minutes, maybe you could take a long position there. And then hopefully this low of day will stay intact and you can mark your risk off by that. You can see the confluence here, right? There's resistance, 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 breakout. First pullback there. It was tested here. Support held. Expansion. Another pullback into what? Old resistance there. Even tested support again there. Expansion. So you've tested it twice, 3 times already. The more times you test a support, the more likely it is to break. But this would be it. This would be it. I would change my bullish bias altogether. Well, I have already changed it. If you're trading under monthly support, I'm not bullish anymore. Because monthly and weekly candles ranges will set in the highs and the lows early on into the session. So if you're like a swing trader and you only trade on, like, say, the monthly range expansions. I'm only a swing trader and I'm only trading the monthly range expansions. You have a new month on the table right now. This first initial move of the month, is trading into old monthly support. So this could be a resistance test from the underneath side of price. And if that's the case, this is probably going to be a decent spot to look for sells, because the monthly range expansion will likely start to fade and then end up being an expansion to the downside. We know this. This is a fact. Candles form like that. This is how a candle forms, right? You have your open, then your first impulse, which is usually a lie, right? And then your expansion. Then your pullback, and then your candle closes. This is what a candle's range looks like, given the time frame. No matter the time frame, whether it's an hourly candle, daily candle, weekly or monthly, quarterly, yearly candle, this is what they all do. Usually, not always, because some candles do this, right? Some candles do nonsense like that, but you get the point. The point is if you're looking for expansion, aka a trending environment, then the first move is usually the fake move. And since Bitcoin opened, yeah, it put a little tiny spike to the downside, but you're 5 days into this monthly range. If we're under this, I'm bearish. It's just experience. That's all it is. Above it, I'll look for bullish entries once or twice. But if we're under it, I'm bearish. Because this could be a test of monthly resistance. And if I just pull out the chart here, you can see right here, it held as resistance, held as resistance, held as resistance. Yeah, you got above it, but right back under it you went. Held as resistance, held so far as resistance. My biggest concern for looking for further downside is all the time Bitcoin traded under monthly support and could not get any downside moves, right? That's another concerning thing to me, is that you just couldn't get anything going to the downside once you were down there. So we'll see what happens, but this white line right there, that's monthly support. That's going to be my line in the sand for all of October. So yeah, obviously, like I said, a candle doesn't always have to move like that, because if it's going to be a choppy or a sideways candle, you're just going to have what looks like a cross or a doji. You know, what a doji, where you have a wick above, a wick below, and just a little thin, narrow body. The line charts is the best thing to symbolize how your candle opens, right? Your opens are on the left of the candle, your closes on the right of the candle, and then the color of the candle indicates the direction of the candle. So you can see here on this candle, you opened, first move was lower, then the expansion up, and then the pullback off of the top, and then your close. Right? Same scenario here. This candle opens, you push up, then the expansion to the downside, then you close. So that's all we're looking for. This open, nice little push to the upside, expansion down, and somewhere it's going to close in 32 minutes. Now, if you get a push higher and you close green, then what you have essentially is an engulfing of this range. As traders, all we're trying to do is identify this, take the entry if we're short somewhere around the high of the open or above the open or the high of day. These are hourly candles, but this scenario is the same no matter the time frame. Open of the day there, your slight push up, liquidate everybody, get everybody, breakout traders, nice and bullish, and then boom, right back down, there's your close. Next day you open, throw down, take out the low of this day, then you close up on the day, just barely. Then you go down, sideways, choppiness. It's difficult to trade when this is all you're doing. You're just liquidating old highs and old lows. This low is still intact. So, this low would be my target if we liquidate this high. That's kind of what I assumed we were going to do, hence me trying to get bullish today, looking for a target of this right there. And that could still happen. Today is not the trade. That happens all the time too. Sometimes I'm a day early. Sometimes I'm a couple days early. Eventually, I will catch it because that's what I do, right? I wouldn't be very good at my job if I couldn't. So, yeah. Let's go over here real quick and look at, where is it? It's on watch. USD JPY, for instance, getting a bullish day today. So yesterday, I got short, but I waited for the liquidation of the daily range, and the reason I got short was simple. Daily resistance. So if we go intraday, if you remember on the stream, the position that I had on stream got stopped out, but on my, on the other account, it was still intact. That account and this short trade is still open. So if this thing pushes above yesterday's high, which is right there, that is yesterday's high, I shorted for a liquidation break. Here's your first expansion move lower. This was looked at as a pullback. This white line is daily resistance. You formed an intraday resistance right there. There's your high of day. So as soon as the market manipulators, or whatever you want to say, whatever this move is, which I just call it a liquidation break, you liquidated the high of day. I threw a market sell order on, stop above that wick, and all of this was the reward. All right? Because that's what I was looking for to occur. We're not getting that today on Bitcoin. You are making fresh low after fresh low after fresh low. You have continuation. But the reason I shorted USD JPY is because if the dollar is topping out, then there's still plenty of meat on this trade, because this trade is still trading at the highs of the range, whereas the dollar has already traded off the range highs. You see that? You're already off the range highs, whereas on this, you're still at the range highs. So essentially what I want to see is that be the high of today. And if that occurs, then Bitcoin will likely find support, because you just did the same thing again right now on USD JPY. You liquidated today's high, which was put in at the end of the London session. You just liquidated it. So if it is going to be a short, you will see price slowly start to meander away from that liquidation. Hence liquidation and then break down. Or if it's a liquidation break to the upside, it's a break out. But these are the riskiest plays because it's simple. If you're fighting the trend, you're going to continuously eat stops. So yesterday was the furthest that we've been able to push on the USD JPY since this range right here has been intact. So I don't know if I'm doing a very good job of explaining this to you, but the market finds equilibrium in a range, right? When it's in a range like this is the buyers or sellers are good. So your sellers are sitting there, your buyers are sitting there, and each time price pings back and forth, it's just simply doing that. And then you have your liquidation runs where you spike out of the range, liquidate any stop losses, and then fall back into the range. Well, on this push, you made a lower high even, so you could be starting to see a change on USD JPY now. Okay? So I love the fact that we've got the expansion lower, set in a low of day. Well, actually, this is the low of today. This is today's low. 1700 hours is the candle close in FX. So this would have been your close on yesterday. This is the open on yesterday. You trade down during the Asian session, which is the fake out move. Remember, the first move of the daily range is usually the false move. You push down, then you spike up, make a fresh daily high here. Then you trade off a little bit and you go right back up. So this trade off is to draw in shorts here. so it could get continuation. So liquidation break trades are difficult. I suggest you look for retests of support trades first until you understand risk mitigation. Once you understand how to properly mitigate your trades, then you can start taking these more advanced trades. You'll see people on YouTube and Twitter talk about you're supposed to sell highs in a downtrend and you're supposed to buy lows in an uptrend. But you'll find it very difficult that you'll find that many of those people that talk all that stuff are unable to perform. You'll find the exact opposite over here on this channel. We do perform. We do know what we're looking for. I took this short, bing, right there yesterday. Now, obviously, this trend line wouldn't have been there yet, right? This trend line would have been here. That's why I say trend lines are so subjective. Trend line, trade right up into resistance. First off, stopped you out. Boom, right there. Whereas the more patient, the more experienced trader, waits for that to happen. Then I take my entry and boom, so did everybody else, right? So, yeah. You're in the right place to learn how to trade. If this is going to be a continuation off of the expansion we've already seen so far occurring on USD/JPY, this is my entry. I can't and oftentimes won't nail the exact top of the move. It's almost impossible. I mean, if you do nail it, you're going to find over time with data and backtesting that it's just a fluke accident. And you can't be consistently profitable if you're just nailing fluke accidents. This is why I try to tell people, don't try to nail the top until you've already at least got some kind of signal or some kind of identifier in the market showing you that there is a potential for range or for a trend reversal. And if you break out above this right here, will that automatically say that it's going to continue to go higher? No, it doesn't mean that, but it is a potential. It is a possibility. So I will stop looking for shorts on this if indeed I lose this position. I did take profits on the move lower as soon as we got off the live stream, right? Because I'm trading most of the time until 10, 11 o'clock in the morning. And then I'll play video games or whatever, but yeah, I'm always sitting in front of the computer because I like to watch what the stock market does all day. Would have missed Twitter and Tesla yesterday had I not been watching. So I am usually at the computer. But we'll see if this continues. If the dollar is going to continue with its bullish bias, then this trade will get stopped out. But if the dollar has made a top, then I have executed perfectly. And I have gotten a position to ride that potential trend change as low as it wants to go. So I am already positioned on USD/JPY. I didn't try to do a whole lot in FX this morning because I really didn't see a setup, but that would have potentially been a setup. So if you are interested in potentially catching this trend change on USD/JPY, remember, I don't know if it's going to work. I don't know that it's going to happen. But if you do, you can watch hourly closes now above 144.51. If you start closing hourlies above 144.51, then you're likely going to break out above this trend line. I will likely be stopped out, and the trend, which is up, will resume. But we'll see what happens. So your short entry essentially would be right now. Right now, you would just take a market short on USD/JPY and throw your stop above the high of day. If you get stopped out, you don't try to short it again. You just wait till tomorrow. You eat your loss and then you go on about your day. So that way tomorrow, if you do get a good nailed top trade or whatever, you're going to be profitable on the week. We try to close out every week profitably here. So we limit the amount of positions we take. We're only looking for the high probable entries or the most likely scenario, I guess, if you want to call it gambling. Whatever. It is what it is. All right, so let's get back over here. I mean, I got Bitcoin up on the other monitor. It's just not doing anything. It's continuous. It's just continuing to move lower. You did get a little bit of a spike there on the S&P 500. We do have that was at the open of the market. Tesla pushing lower, trying to push down into 240.55. Let's see if 240.55 access support on Tesla. It would be a liquidation break if you did get a test of that level and then start to trade away from it. But here's the thing. I mean, why are people selling Tesla just because Tesla just bought Twitter? Or is this Elon Musk selling some of his Tesla shares to buy Twitter? Man, what would it even be like? I can spend $45 million on Twitter this week. Why not? I'm sick of always getting shafted. So I figure I'll just buy it. That's power right there. We'll keep USD JPY pulled up for anybody that is interested in potentially taking that short trade. Wait for you got 20 minutes left. Don't try to take it right now because you're back above the line. You kind of want to not see the 5-minute proceed with higher closes. So on the fall, if this 5-minute candle falls, then you could potentially look to get in there. You want to essentially take your short entry at this line, but you want to see price start to roll away. Because remember, the asset is bullish. It is bullish on the daily. It's bullish on the weekly. Here, well, no, you're bearish on the week. So I like that a little bit better. Open could also act as resistance. Let's see where that is in regards to things. Yeah, I will probably get close to being stopped out if it gets back up there to test the weekly open. I would essentially want to see yesterday's open maintain as resistance on that. And if, like I said, if this occurs, see how you're back under the hourly resistance there. Take the short trade, though, to stop above there. First profit target would be roughly right in there, 144.334. That is if you close under. A close above 144.510, you exit the position. Tesla pushing down over here now into the level. The exact level that we are watching is 240.55. That is daily support. Until you close a daily candle under it, that's support. So we'll see what happens here as Tesla pushes into it. Remember, it will be enough to liquidate the last few days of price. See here, you don't see any price. That's because these are your days that you're looking for the liquidation to occur on. That just means anybody that got long here or here, they're more than likely stopped out yesterday, but we'll see what happens. And then, once again, people just selling it on the open isn't necessarily a good thing either. But I think 240.55 will be pretty much that area. And if you were on here yesterday when we were discussing Tesla, that's pretty much I won't like it for longs much more under that. I mean, you do have other support zones down there that you could potentially look to be a buyer at. But if the market's going to roll back over and continue to be bearish, that's also going to be weekly support or really close to weekly support. If you do lose that, then your next level to watch for potential support would be 240.07. No, 227.26. Apologies. 227.26. That's if you lose this support here. You got weekly and daily support there, so there's quite a bit of confluence there. So let's see if that holds as support. We'll see. It's right there. 240.55 and 240.07. Potential buying opportunities there. S&P 500 got the initial spike, but that's only because the SPY just opened. See that? There's your SPY. There's your market open. High of day set. Instantly go back to retest the open. It's not really a bullish signal. A dollar pushing up, making a fresh daily high. Right now, making a fresh daily high. So DXY, remember, DXY is in an uptrend. Everything else is bearish. I mean, this thing's been in an uptrend since the beginning of the year. Year to date, there's your chart, year to date. Let's put it on auto here. Year to date. There is your year to date trend on the dollar. That is clearly bullish. Tesla pushing into our potential areas of support. USD JPY pushing up. That's not what we want to see. This is yesterday's open, but this is the resistance level at which we want to see it close under. I think you just made a fresh daily high there as well. No, you didn't. All right, but still, nonetheless, it's going to be difficult to take this short if risk rolls over. And DXY is reloading, so I got to reload the whole damn thing here. Come on, Internet. How bad can you be? Excuse me. We don't need RSIs on the 5-minute time frame. Pushing down to 240.07. This is where I told someone that I would potentially be a buyer if I was looking for the bullishness to continue on like S&P and all that stuff. Bitcoin making fresh daily low. Fresh daily low on Bitcoin. So I don't think the bid is in. I mean, up there is where you wanted to be a buyer. Anything under that, it's over with for today, all right? For today. It looks like the trade on Bitcoin today was the London session short, which was in here. The London open short was the trade to make. And here in the New York session, you are getting downside continuation. The further this goes lower, the worse it starts to look. This gray line is the overall trend line for the macro market structure here. You can see that it might be a little bit different because I tried to encompass all of those highs there. Yesterday, you broke out above it, took out last week's high, and pretty much instantly rejected. So the fact that you took out last week's high and rejected instead of getting bullish continuation tells me a story, right? It tells me that the sellers were sitting there. So tomorrow, I would be looking to sell resistance more so than buying support. Tesla's trading under the levels we wanted. USD JPY pushing up. That's because the DXY is making fresh daily highs. It sucks. It does. I mean, you come in here, you look for a setup, you take your setup, and then it ends up not being the right setup, and you just got to basically give it up for the day. Good morning, Heath. Good morning, Danny. Hey, boss, didn't know it was a live stream. Yeah, it's because I have to do it today. I won't be able to go live tomorrow. Maybe it holds here. We'll see if it does or not. S&P 500 still unable to take out the low of day, which is going to be right there. That is your low of day on the S&P 500. This is basically E-mini futures, not the SPY. So there you go. Bitcoin getting a slight little push after this one final liquidation lower. That means you've been stopped out like since 7:30 3 times. You've made fresh daily lows. Fixed range volume profile, I think. Yeah, it is the fixed range volume profile for sure. Yeah, curation. It's a volume profile. Fixed range. It's not fixed range. It's the session volume. If you click open the volume or the indicators on TradingView, you go down to the middle or technicals. This is a new thing they just made. So technicals, volume profiles in the middle over there. It's session volume profile. It's today's volume, the profile for today's range. I am a day trader, so I have to know where the volume is on a daily range. If you just take a random amount of daily candles and throw a fixed range or a regular volume profile, that doesn't tell me anything. And it doesn't tell you anything. Because if you just take one daily candle away from there, then the whole volume profile changes. So stay away from that. I mean, you'll see now analysts on YouTube using that. So it'd be like this right here. What is it? Visible range volume profile. This thing here. You see how I'm on the daily time frame? What does this tell you exactly? Nothing. Because if I scrunch the chart up and bring, like, say, 7 more daily candles over here, this changes completely. Or vice versa. If I go out, this changes completely. This is a useless indicator. Useless. It will give you 0 edge. 0. And I don't even think the people using them realize that. 0 edge in that. Unless you use the exact amount of candles each time. Then you could do something. Or even the fixed range one where you want to look at the volume from, say, this high to this low. Okay, maybe that can give you an edge. But the other one, nah. And as far as, like I said, I'm a day trader, so I'm doing this every single day. I need to see where the volume control, point of control is each and every day, because that's going to help curb my bias moving forward. If your volume profile is at around the lows of each day, then that tells you that, that more than likely you're going to see bullish continuation. USD JPY pushing up, so looking like it's wanting to stop me out of yesterday's trade. It was a profitable trade, but I was just trying to nail that high that everybody was hoping, right, would be, because everybody wants Bitcoin and S&P 500 to catch a bid. But I think they're a little bit early. Pushing up. This means that DXY is probably doing the same thing. Let's get the DXY up there, because this trade is no longer valid. You got 9 minutes left on the close, and this is where I wanted to see it close under. You're way above it. Way above it. Is it possible that you close under it in 9 minutes? It is, but it's unlikely. So this trade is scrapped for today. Or lost. If you took it, my bad. I wish I knew what price was going to do. If I did, I'd be the richest man alive. No doubt about it. The richest man alive. DXY, yeah, pushing up, making a fresh daily high, and also taking out yesterday's open. Oh no, not quite. That's an old support. Yesterday's open is here. I gotta remember, I can't open the chart from up there and bring it down here and expect the same lines to be there. I don't really want to see it get back up there. It's going to look like this was a trap, like this was just a one-day offsides type of move. Get everybody nice and bearish on the dollar. And then that tells us that most of the people on yesterday's range was buying it, not selling it. And then this morning, buying it at the open, buying it, not selling it. It could also be profit taking on the shorts. More than likely, this was just a profit taking move, because there's been no reason for us to stop looking for dollar bulls or bullish dollar plays. Like I said, the dollar is the world reserve currency, so that's check number 1 for bullish continuation. And check number 2 is, as long as the Fed keeps raising interest rates, you got to look for dollar strength. And the Fed is prepared to break some things, so I'm sure they're more than willing to watch the S&P 500 get spanked. I don't know how low it goes before they start to change their policies, but as of right now, there is no change. Just because the RBA did a little different head fake, that doesn't mean the Fed will. I think people are getting ahead of themselves. But we'll see. You're probably back above the 21 on the daily, on the dollar. Yeah, you are. Remember yesterday I said it doesn't matter where this closes, it matters where the tomorrow closes. Because tomorrow might close back above it. And then that's going to change everything. Algos will be changed around from bearish to bullish. And then looking to be a buyer on the dollar. Tesla struggling down here. It is a big level. It is weekly and daily support. So, I mean, I typically expect to get a bounce at these places, especially if it's the first time that you've seen a test of it in a while. I typically expect to see a bounce there. You're just not getting it. And that's probably because of the news that, Tesla's or Elon Musk is buying Twitter. So that just made everybody just hit the sell button as soon as the market opened today. Sell, sell, sell. Not shorts, but just sell my position on the open. Sell, 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 sell. Boom, down. It doesn't look great. But if you hold support here, if you close above this today, that's going to look really good moving forward for support. I guess that will determine or be determined by whatever the S&P 500 and all the other markets do today. Let's see what we got on the hot list, see if anything's moving drastically. We got Peggy up 69%, Kid up 61%. Both of them under $6. There's Kitty. Nice move to the outside. Nauticus Robotics. I don't know what kind of news this thing got, but clearly gapping up from yesterday's close. There's yesterday's close to today's open. Gapping up 68%. You just made a fresh low of day. So remember, whenever you make a high of day and then instantly go back down and test the low of day, that's not typically very bullish. It's usually a bearish signal. Peggy, on the other hand, has opened and traded higher. So Peggy will probably be on a lot of people's watch list as they started trading it yesterday. Some news broke here. That's where volume started to pick up. So this thing might fly today. And then on your volume gainers up here, Peggy and Kit's definitely going to be there. Twitter is number 3. Naturally, 16.49 million shares traded this morning already on Twitter. I don't know why Ford has been on the volume gainers list for several days now. That's why. It's been, maybe there was some kind of news or something. I don't know why Ford has been so, I don't know. He's supposed to buy this thing for like $52, $54 per share. So that's the market pricing that in. Trying to get long now isn't a really good idea. And once that, even if price is trading down here, once the sell occurs, if price is trading lower, then you could buy a few shares of it. But they're just going to make you sell it. Because if I am mistaken, Elon isn't going to have Twitter publicly traded for the first couple of years while he owns it. Because he's got to go in there and revamp the whole business. He's got to locate all those Twitter bots so he can put the smackdown on them. And man, that'll be a good day, won't it? All them damn Twitter bots. There's like so many of them. There's bots everywhere. Bots control the internet. All right. DXY pushing up. Bitcoin still making fresh lows. Twitter doing nothing compared to what it did yesterday. I guess we can keep Tesla over there on watch because we are watching it at support. Current support that we're watching, 240. All right, let me answer some of these questions. Your thoughts on that? I read that. Can you do a fresh analysis on ASML? naturally analysis will change. I mean, you got a slight bounce the last couple of days. Is that because of the S&P 500? I don't know. I don't know. You got to bounce. You got to bounce down here. And really and truly, there wasn't really much down there for it to bounce. Daily support there, daily support there. But you can see that you opened under it, traded above it a couple times. And you finally did get the move higher. Yeah, I mean, even there's really nothing there. Yeah, really nothing there to cause the bounce. But if the S&P 500 continues to roll over, this is going to follow. You traded right into that. That's where you're going to find resistance. So if anything, especially with the market reacting the way it is today, this is on the lows of the day. So be careful on shorting it as well. I just don't see a trade on it. I don't know what you're doing. I don't know what your investment objectives are. Are you day trading it? Are you buying it to hold it? If you're buying it to hold it, then wait for daily support to be a buyer. Daily support is there, 433.29. So if you want to be a buyer of this, you got to wait for a retest of that. If you're shorting it for a day trade, then you're just going to short daily res or supply. And supply's already been tested. Was it tested pre-market? No, it was tested on the open. So just that's where I would have applied a short position if I wanted to short it, for the gap fillage in the village to occur, because you got a gap. There's a gap right there. Yesterday's close, not yesterday, but Monday's close, gapped up. And that low is still intact. So that would be my initial first target. That would have been the entry. First target would be there, and then I would just hold on to the rest for the potential gap fill. Then after that, you could potentially be a buyer. I can't buy it up there. I just can't do it. S&P 500 just made fresh daily low. Tesla's probably going to break out. Look at the DXY go. Here you go, getting ready to test yesterday's open. So that entire bearish move yesterday has been retraced. Yuck. Looks like the sellers licking their chops. There's yesterday's open on the Bitcoin. You're testing that trend line, so the buyers need to step up right here. Pretty much the last area to do that too is here. So if you want to be a buyer, this is your last chance. Once you get under this, I don't know. S&P 500 making a fresh daily low. Keep that in mind as you hit that buy button on Bitget's exchange. Keep that in mind. Fresh daily low after fresh daily low after fresh daily low after fresh daily low. You are trending lower. Is there anything that's coming up on there for us to be a buyer? Well, you got last week's high. So will people be a buyer at last week's high? Let's see. That's last week's high right there. Let's see if that coaxes the buyers back into the market. We'll see. We'll see if last week's high looks like a good place to be a buyer today. I'm not taking the trade, guys. I've already ate a stop. If you want to take it, take it. You want to buy it pretty soon. I try to only eat one stop per day. I don't want to ever eat them, but sometimes you do. All right. I could see a lion. Yeah, I'm definitely a Leo, so let's stick with lion. Yeah, that's what we just got. That's why you're getting that. Looks like it was a beat. So once again, you got a beat number, but getting a bearish reaction. We got a beat number the other morning as well on something, and it had a bearish reaction as well. Trading the news is like virtually impossible because you'll see that you won't respect many technical levels, and you'll have good news come out, but the market will sell off. I mean, how much further do you got to go before you completely bullishly engulf yesterday on the DXY? Always remember, guys, the trend is your friend until the end of the trend. You'll do much better. Much better. Finding the areas for entry is the most difficult part for any trader. Because you can't see into the future. You just don't know. Stick around on this channel and you will learn the higher probable areas to take those entries. But if you get above 111.88, spot 88.6, you will have retraced or completely bullishly engulfed yesterday's bearish day. That's not good. So on yesterday's range, even though it looked really bad yesterday, people were loving it. They were buying it up. First chance you've gotten to buy the dollar for a while. A multiple day pullback was a beautiful place to be a buyer. And you will be trading back above old resistance there. So yesterday, let's go over here. If you're not following me on Twitter, it's at trade_talk_. I do post good information. Sometimes I shit post too, so I get into it. But where was it? DXY may bounce here. See that? 110.251. Mr. Trade Talk announces that the DXY may bounce here. Go back into the chart. That's where I said you may get a bounce. Ooh, that's a hell of a bounce too. Let's just see how far it's up. 1.27%. Oh, man. And I was looking to be a buyer. So, yeah. That's the human aspect of trading. The difficult part. But you're trading into yesterday's open, so if you're going to see bearish continuation on the DXY, we would want to see that happen now, essentially. We don't want to see a bullish engulfing because this is clearly in an uptrend, and a bullish engulfing, yeah, that's just going to look more bullish, and people will start to buy it back up again. Trend is your friend. That's a hell of a bounce. S&P 500 make fresh brand new daily lows, trading into last week's high. If you're wondering what that line is on the chart, it's 37.39. That is last week's high. That blue line right there, that's last week's high. Took it out in spectacular fashion yesterday, but you're back down to it. And then on Bitcoin, you did the exact opposite. Well, you took out last week's high, but you got instantly sold into. It wasn't instantly. It took 4 hours. But I mean, if you would have been watching last week's high on Bitcoin to be a seller, you took the right trade today anyway. There's last week's high. Oh, it's already up there. And then You traded up there for 4 hours. Yesterday at 4 o'clock in the day, you penetrated last week's high. You could have taken the entry there. And it never did make another high. And you're getting downside continuation. It doesn't look like bad downside continuation still, though. It's just, man. And to be fair, this last intraday support that we were watching earlier, you did close above it. S&P 500 making a fresh daily low. How many times can one man say that in a given day? Come on, man. What's the indicator that's showing BTC buy sell next to your volume profile? Up here, that's just this. That's not an indicator. That's like if you got a brokerage linked to TradingView, that's how you just buy or sell. See, it's telling me to log into my broker. I don't have my broker logged up. But like you connect paper trading and then that fires up. So you can actually take a sell. There's your sell. That's the order pane. I'm not sure what you're talking about. Maybe you're not talking about this, but I don't think I had any other indicators up. So, yeah, it's not, see, it'll follow me to any chart I go to. It's just TradingView's buy, sell, order pane prompt. Elon can't sell right now, locked up in period till earnings. Yeah, I know. I was just goofing off, man. Just throwing a joke out there. Yeah, Ray, it came out and it was a beat according to this. It was a beat. So I don't know why the market's taking that as a negative. But I don't follow much news. I like to trade during news items if there's a liquidation event about to occur. If you were positioning for a longer time horizon of a week plus, what position would you take? What are you talking about? What asset? What asset? Right now, I am not a buyer of stocks. I will not be I hold a stock portfolio. I am a day trader to make my everyday money, to pay my bills, right? My everyday, day-to-day stuff. I use the money that I make in trading. When I trade Bitcoin, I'm trading with Bitcoin. So that lowers my tax. Well, not lowers the taxes, but I pay less taxes because I'm trading with Bitcoin on an exchange. So the exchange is paying me with Bitcoin or without Bitcoin. It's when I take the Bitcoin from exchange back to Coinbase and then convert it to cash, then that's a taxable event. So I don't do that. So I trade Bitcoin to accumulate Bitcoin because I want to own as much of it as possible. And the best way to do that is to trade it. And then for my stock portfolio, long-term portfolio, I'm still holding some assets, right? I bought Tesla when it was much cheaper. So I will continue to hold Tesla. I mean, Tesla had a what? How big of a move did Tesla have? It was massive, man. It was one of the biggest movers in all of 2020, 2021. I mean, it's massive. So, I mean, I'm still holding it because I was a buyer in Tesla a long time ago, like 2017, 2016. So I'm not going to sell that position. All right? I'm not going to sell it. I'll just hold it. In fact, I'll buy more if it gets lower, but not right now. I am not a buyer of stocks yet. I need to hear the Fed say something like, well, we've got inflation trending lower, so we're going to slow down the amount that we are hiking rates. We are going to stop hiking rates. These are the things that you want to hear. And like I've been saying for the last 3 months, you can get ahead of that by simply watching the CPI prints. What we want to see is we want to see inflation starting to trend lower. That's what we want. The Fed's target is 2%. We're at 8.3%. So we got a long ways to go, but we want to see it start to drastically decrease. Say next month or this month, at the 13th, I think, which is in a couple weeks, we'll get another CPI print. We want to see that number It was 8.3 last month. We want to see it at like 7.9, 7.7. Is that what's forecasted? Probably not. But that's what we want to see. When we start seeing CPI trend lower, 7s, get into 6s, I will start adding to my, re-add some stocks. There are a few stocks that I love, and I would say you could buy now, but please understand, if the bear market's not over, you're going to see, even if you buy today, it go lower, right? Lower. But, I mean, who doesn't like AMD, for instance? Who doesn't like AMD as a long-term hold? Nobody. AMD is a good company. They make money. And you're getting it for 60% off, right? Netflix, not so much a good company, but they do make money. They miss every now and then, but they hit more than they miss. All right. You got more green earnings up there than red earnings. This is a good company to have. I don't know why it took such a massive hit, but this was one of the worst ones hit. You lost almost 80% of Netflix's value. 77%. So yeah, pick up some Netflix shares just to hold on to for years and years. Who doesn't like Nvidia? Nvidia, another chip manufacturer. Fantastic stuff. I have an Nvidia video card in my computer as we speak. It's down 64%. So pick up a couple Nvidias. What was the one I was looking at yesterday? Roku. I also own a Roku. Look at these earnings reports on Roku. Look at this. Red, green, red. These guys make money. Why did they get beat up? Well, bear market, 87%. Now, if you know something that I don't about any of these companies that I've just mentioned, like say, for instance, well, Roku, the reason it got sold off so bad was because Tom, Dick, and Harry decided to go in the backyard and beat the ever-loving shit out of Tom, Dick, and Rose. And now the CEO is totally in love with, like, if you know any of that stuff, then don't buy it, right? I don't know anything. But just looking at the earnings that the company has performed year over year, over month, I'm just saying they got beat up because of the bear market. There could be another truth to the matter. I don't know. But good company overall, 70% off. This thing was trading in November of 2021. Well, let's call it July, at $489. Now, monetary policy is changing. There are some things happening that will affect this. You're not going to see another run back up to there anytime soon. But as far as for a long-term hold, is there a higher percentage chance that Roku will be worth more than $58 10 years from now? I think that there's a high probability of that occurring. So, but that's the way I go about my portfolio for stocks. I go about it looking at it as a long-term investment. The same way I am with Bitcoin now. So I'm trading Bitcoin in and out, but only with Bitcoin. So I'm not making any cash transactions here. It's just I make money off my trades. And then when I get a substantial amount of Bitcoin on exchange, I then take that and put it in a cold storage or over to Coinbase, which I don't put it over to Coinbase. I don't know how your setup is. I have a cold storage wallet, right? And I move it from exchange to cold storage at whatever price Bitcoin is trading at that day or that week. I try to do that on red weeks, but sometimes I just do it whenever I do it, right? And that's all I'm doing. And I'm just trying to accumulate literally as much Bitcoin as I can get my hands on, because I, like most professional investors, know that Bitcoin and S&P 500, NASDAQ, everything is going to have another bull market one of these days, one of these years. This bear market is not going to kill the world. The Fed will get inflation under control. the markets will then start to find investors again. America is the free market. It is the free market. Therefore, the market will fix itself. When? I don't know. You know what I mean? I don't have a clue when that's going to happen, but eventually it will happen. So for like just a long-term portfolio, you know, you want to pick up some of these things. Walmart is never going nowhere. Walmart pretty much dominates the retail selling of anything, goods and services. Most people in America are broke. It's only the top 1% that are rich that don't shop at Walmart. Everybody else shops at Walmart. This is a good company to hold in your portfolio. Target, same thing. They're another big company. Amazon, nobody's going to knock Amazon out of its spot of being the top online place to be a buyer of goods and services. Amazon, good company to own. Down to the lows, 44%. So not expecting, like I said, these things to get back at all-time highs. I'm just assuming that once I start adding to my stock portfolio, I'm pretty sure that, you know, the bear market will probably be over at that point. I'm not doing it yet. Not doing it yet. I am waiting because I think it's too early. I didn't think that 2 months ago. I thought there was a good chance the bear market low was in because of the CPI. So let's go here to Thursday the 13th and see if that's when the CPI is. And it doesn't look like, yeah, right there. Core inflation rate and then inflation rate year over year. So this is the next time we get, if it's under 8.3, it's not falling fast enough, but it is falling. And if you get another lower print, 8.2 or 8.1, you will have a trend. You will have 3 lower prints. Now, if it is still in the 8s, I am not buying. When we start to get in the 7s, the low 7s, 6s, I think you can start buying. I think you can start adding to your portfolio. And if you don't want to, then don't. All right? That's what I'm doing. I think you're early just yet. But as far as I'm concerned, as Bitcoin goes, I'm going to buy that forever. I'm going to be a buyer on Bitcoin for a long-term hodl forever. I don't think Bitcoin's going to zero. If you look at Bitcoin's price chart, it is an outperforming mofo. Continuously outperforming. Elon, read that. Can you talk about how you push 1/3 of the position after you take profit? I just leave it on. You just leave it on. So I was likely stopped out of the USD JPY position, but you just leave it on. So if you do catch the trend, all right, so basically the way I handled it versus the pound yen, because last year or 2 years ago, I keep getting it confused, but I caught the pound yen trade when it was bullish. So let's go over here. I caught like most of that, right? Let me see something here. Yeah, all right. So I caught like most of this right in through here. Right in through there. And then the way that I did it was I did the entry the same way that I always do, right? I was a buyer at daily support. Then I held it. Then I took profits on the move up. And then when price started to trade away, I just left it. I just left the position situated. I didn't mess with it. Position brought the stop loss to break even. So let's say the white line, and it just started to trade away. What you can do then is you don't want to move your stop to bearish candles, right? Not until you get away from it. Like start taking out the highs. Once you start taking out resistance, then you could trail your stop up to support. So trail your stop, not up to support, but up to this candle's low. And then wait for price to trade away again. Set in a couple days of bearishness, take out resistance and start. Then you just trail your stop back up to there. Now, once you do that, once you move your stop a couple times, your account is going to grow significantly. It will be up to you to determine when you're going to take profits again. But you do eventually want to take profits again because we don't know if a trend is going to continue or reverse. So you do want to protect your position by taking profits when they become significant. You take that money out by half is what I do. Just cut whatever's left on the position in half. Take half the funds out and then just trail the stop up. Just keep trailing the stop up. Just keep trailing the stop up. And like eventually, waited for this, I probably trailed my stop up. Eventually, you're going to get caught. I think I trailed it up there, and then that's when I got caught. Just keep trailing it up, and then boom, then out, stopped out. So essentially, I caught from here to there, which, not great, but it was like 400 or 500 pips, 900 pips, something like that. It was a good trade. I was in it for a very long time. It was the best trade of the year, naturally. You just need one of those. One of those can really make your portfolio grow. Really make it grow. You can see how volatile this move was. In the span of 4 days, man. Boom. Super volatile. Right now, it's difficult to catch the pound yen, but I'm in the belief that this thing is probably done for a minute. And if I do want to short the pound, I don't want to short the pound versus the dollar. Naturally, because it's at the lows. Now there is supposed to be some government intervenes going on here, or intervening. So we have to keep this on notice. But if I want to short it versus something, I want to short it versus something that has some meat on the bone. This has been just going up and up and up and up. So yeah, if I want to short it, maybe start looking to short pound yen pretty soon. But if the government does intervene, then it isn't going to be a short because the pound's going to get stronger. But we know that the Japanese government is supposed to start intervening too. So I just think that it's probably a good time to start looking for a lot of these very bullish for a very long time assets like pound yen, dollar yen. Probably a good time to start looking for that trend reversal. But nailing the exact trend reversal is going to be difficult. So you might take a couple losses before you actually get it. And that's okay because that's trading, that's investing. As long as you're managing the risk, you know what you stand to lose each time you get in a trade, you're doing it right. Eventually, you will nail one of these big monstrosities of a move. We just got to wait for the stars to align. But I am watching USD JPY. I am watching pound yen for that potential short. Another one that you can watch for a potential short, USD CNH. Because the government, even though they don't tell us, we were looking for this to break out when it was trading down on the lows. We know that the government intervenes with this asset. And I think, according to what I can see here on the chart, you're probably in a good spot to start looking for that government intervention. All right? Probably in a good spot for that. So We'll watch $7.14 for potential shorts on the USD-CNH for a potential trend change. How long that lasts, I have no clue. But Forex usually does that, right? Forex chops around back and forth more so than like a stock. But I don't want to sell the ones that's already been killed. There's no meat there. There's no meat on the bone. It's already been killed. The trend line that we're watching, we'll see if it holds. Moving on into today and into tomorrow. Tomorrow I won't be with you guys. I won't be in the Discord probably much either because I'll be on the road at 6 o'clock in the morning. So right around the time that I usually will be trading, I'll be driving. I don't know if I'll be out there a day or two or if I'll just be there a day. But I will let you know as soon as I get back. Nonetheless, it will just be a day, maybe two. It's not going to be that long. It's not going to be like a week or nothing. It's just a day or so. And I'll be back. We'll be back strong. I'm just trying to run through some of these questions and then we'll wrap it up. I apologize. Let me clarify my inquiry. Next to your daily volume profile, SVP, your chart is showing as the amount of Bitcoin being bought or sold. Oh, got you. Yes. Yeah, those are the actual numbers. You go into settings. So right here on the settings cog, you just click values. You want to get it off gray because it's difficult to see it. So I just go like white. And then on the box there, the histogram box, if you want to see the daily range, you just highlight the box a little bit. Not too much because you don't want to interfere with any of your other lines or anything. And that's the way I use my volume profile, just like that. So I can see the high, I can see the low. Automatically, I don't have to guess where it is. So we know the high of day was put in last night at the open. We know the low of day was just put in 10 minutes ago. And you've been making fresh low after fresh low. So you are in a trend to the downside. So we don't keep trying to buy that. But the blue signifies the bids that happened at that price. And then the yellow or the left or right hand side, sorry, the left is the bids, the right is the sells, blue is the bids, yellow is the sells. And then down here at the very bottom, it shows you what has transpired today. Now, this will only be relevant to exchange, the exchange you're looking at. I am on Coinbase's exchange, so this is what has happened on Coinbase today. There are companies that keep their volumes secret, like Forex.com, so you will not be able to use a volume profile or a regular volume by time indicator. But for me, the way that I trade, because I am working inside of the daily range, always, because I am a day trader. So I am trying to position myself for a daily range expansion, whether up or down. If I'm being like I said, I can be a seller today, a buyer tomorrow, but that's not my overall long-term bias. That's just me being a market operator inside of the daily ranges. So I want to know at which price the most volume traded. And I typically only worry about what's happened the last few days. So you can see today's range is trading as an inside day. You are trading inside of yesterday's range. You can also see where the majority of the volume traded yesterday. Now, if you have good internet, this should populate even with the numbers. I have shitty internet, and I'm trying to do a live stream. So, yeah, some of the stuff don't populate when it should. But if your internet's good, you won't have no trouble. But I can see that, we had nice 2 big bullish days. Here, the volume profile is a little bit tricky because it's near the upper edge of the daily range. But the numbers, like, I can't really see it. Let me make it bigger. Or let me get off auto. There we go. So now I can see it. So you were pretty close to neutral there as far as the bids and the sells go. All right, you were pretty neutral there yesterday. So here we are today. Yesterday's high stayed intact. Then your new volume profile or your new point of control comes in where? At around the top of the daily range. That typically is a good indicator to tell you that price may continue in the direction based solely on where the volume profile point of control is. So on this day, the volume profile point of control was where? Under price around the New York session open. So that tells you, it doesn't always work. It doesn't always work, but it does work often. And with the other things that I teach on this channel will give you like the whole strategy that you need to perform to take these trades in this manner. I am a day trader, so I must operate inside of this box. Then the next day happens, then I am looking for a new day trade inside of this box. One trade. That's it. One trade per day. That's still a lot. That's 5 trades per day on a 5-day week. So what you're trying to do is close out the week green. So if you win 2 trades or 3 trades even, then just stop trading for that week. Wait for the next week. If you're taking thousands of trades per day, like I've seen some people's charts that they show where their entries and exits are. If you are entering short here and getting stopped out there, and then entering short here, or long, and then entering short here, getting stopped out there, trying to buy here, getting stopped out there, then trying to buy there, getting stopped out there. Every time you do that, you're not only losing money from your P&L, that's your money, you're also getting charged fees. Fees, baby, fees. The more leverage you use, the more fees you will get charged, and on and on and on. So taking 1, 2, 3 positions inside of one day's range, you're going to know pretty soon if you're right or wrong, especially in the New York session, because it's the last session of the day. I don't care about the London close and all that stuff. I don't care about what happens at 5 o'clock. I'm talking about the 3 main sessions. Your Asian Open is the open of every daily range, especially if it's a futures contract, because it doesn't close like a perpetual swap. It doesn't close. It trades 24/7. So you have the Asian session, which starts off the daily range. That's why we don't look for trades during the Asian session, because the Asian session is usually the fake out move of the daily range. And it was last night too. Well, it wasn't last night. I mean, if you sold the open, you were good. You were good. Just sell the open at 8 o'clock. Just boom, hit the sell button. Boom. You were good yesterday. But that's not going to happen very often. Take this day, for instance. If you just hit the sell button at 8 o'clock again, you got stopped out probably pretty instantly. You open, you had a little move to the outside, then you migrated down to purge the liquidity under the open. Then you get a little bit lower. Then the candle starts to expand all the way into the London session. So here, once again, the London session didn't call the high or low of day. 2 o'clock to 4 o'clock is your London session. And then from 7 to 10 is what we call the New York session. And that's where you get the last bit of volume. So what we're usually trying to do is go the direction that the day has already shown us the propensity to go, essentially. So today, in today's range, you opened, you put in a low of day, then you traded up, stayed away from the high of day, you traded sideways, come into noon or midnight, dropped down a little bit, traded sideways, then London. This is when you get the biggest amount of volume through the day. London session. This is also where you may find a daily high or a daily low. And you just have to use your head a little bit. If you're trading around the high of day, around the London session, there is a strong possibility that if you're looking to get long, you will get stopped out. It's that simple, because the London session usually makes the high or low of day. And if you're trading above the volume profile, above the high, which I don't know where the volume profile was at this time, this will shift throughout the day. The red line will shift throughout the day. I would say here on the open, it was probably here, and then it stayed here, and then it probably dropped a little bit. The London session, it came up a little bit. So, I mean, it will change. It's not an indicator that you want to look at to take entries. It's just an indicator to show you where the volume is trading for that amount of time for that daily range. At what price? That's important. But when you set in, the London session comes up, boom, sets a high, trades away, comes up, boom, sets a lower high, and then gets the expansion lower. Coming into the New York session, we should have been looking for shorts. Why weren't we looking for shorts today coming into the New York session? Because we were at the low of day. It's as simple as that. I can't short an asset at the low of day. I just can't. It's against what I do. If I do take a short at the low of day, there's a pretty good chance that I might get stopped out because the thing might roll over or turn around and go the opposite direction. So like today should have been a short, given all the data that you had in today's range at, let's say, because I come to the desk at 6 o'clock. So this is when I start trading. This is when I'm starting to look for my entries here. So all of this data has already occurred on the daily range. The whole daily range is sitting in front of my face. I know where which at this time, the low of day, this box wasn't here. It was up here. Let me show you what I mean. Boom. See there? That's where it was. So coming into today, my daily high was the open of the day. The open of the day set the high of day. Asian session. Fake out move. Price trades down, trades sideways, a little bit down, then up. The London session comes in to trade the daily range and down. So if I would have been awake during the London session, since we were trading up around the high of day, I would have been looking to sell any resistance that I could find. Which, this would have been daily resistance there. So let's go back intraday and see where we're at. So there's daily resistance. I don't watch the 5-minute time frame. I only watch hourlies. So right here was intraday resistance. There's daily resistance. Here's my whole daily range. Low of day is there. Volume point of control is setting above where price is. So this or this, any test of these two white lines would have been a sell entry for me, just based on what I have in front of me. But I took the bid because I took the bait like everybody else did on the breakout of this trend line, right? I was like, well, normally I would be shorting this or looking for an entry too short. So let's see, did we get it? Did we get that entry? Were we able to get a test up into there? Where did it go? What happened here? Something's messed up. Oh, what is this? What is this crap? Man, why is it like that? Oh, man, this is new and I don't like it. Quit changing shit around. Fuck. Man, I hate new stuff. That's the one I just did, so let's do this one. All right, so basically all we want to do is we want to see if we get a stab up into resistance, which is there. This white line's daily resistance. So you get a stab up there, then I don't know if I'd be trying to sell it because the London session's already happened. Asian session's already happened. London session made a lower high. There's your low of day. This looks like the target if you're looking for shorts. Did you get an entry? No, you didn't. Boom, down. So that's where we started the day. So really and truly, there wasn't a trade to take, not given the information that we had on the chart. So you got one of you guys that's watching this, go where I started this rant, put a timestamp there if you can, and share this little part, because this information is all you need to be a successful day trade inside of the crypto, Forex, and stock market. Day traders, professional day traders, are doing what I am doing. We do not give a shit about a cup and handle, about an inverse head and shoulders, about an ascending triangle. None of that. Alls we care about is at the time that we enter our office, when we are here to strike. Where's the daily high? Where's the daily open? Where's the daily low? What happened yesterday? That's it. That's it. And we try to take that information and get into an entry. And occasionally you will nail the very top tick of the day. Occasionally you will get stopped out. Today was no trade. And we know that now for sure, because we can just play out the rest of the day. How do you kill this thing? I do not like that new stuff you got there on that. But anyways, sorry about the rant, but that's all we're doing. Every single day, every time I do a live stream, you already know what I'm looking for. I will already know where monthly support is, weekly support, weekly resistance, monthly resistance, stuff like that. Any big time areas. All right, so coming into today, I had a bullish bias. I was wrong. But this white line is monthly support. We were trading above monthly support. To be honest, we bounced off of monthly support. So right here was the first area that we were watching, but we didn't take an entry because we were watching to see if we closed below intraday support. This was intraday support at that time. Then you close below. So basically what I said then was, if we make a fresh low of day, we can look to buy the low of day, expecting a liquidity break. Take the fresh low of day, buy it, throw your stop under, and expect it to go higher, looking for all of this to be a fake out. And also, like I said, because the last 2 days were really, really bullish, I was wrong. I ate a stop. Right there. Boom. Down. And look what you've done since. You've just made fresh low after fresh low after fresh low. So essentially the trade was a short. But you can't short the low of day. You just can't do that. You can't buy the high of day. You just can't do that. Because more times than not, you're going to be wrong. Occasionally you'll be right. But more times than not, you'll be wrong. So the way we sit right now to shape future biases is you want to see where today closes and what color. Does it close green? Does it close back above this? If so, then moving on into the next daily range, you can watch this day's open or close for potential entries, depending on what time of the day it is. You only look for trades. If you're up for the London session, that's when you really want to look for trades. London session is the best time because we know it sets the lower high day usually. And sometimes you can top ticket. And then when New York comes, we'll get a retest of an important level, and then away we go. Right? Then away we go. But that's all we're doing. intraday. We're looking to operate inside of this range, and we look for the high probable areas to potentially get those entries. And then back and forth, on and on and on you can go. I mean, daily support was there. You closed just barely under it. Then you didn't make a low a day, and you made an expansion to the upside. So on this day, we would have been looking for pullback entries, but you didn't really get a pullback to an area where we would have been looking for the pullback to get to, like say there, for instance. And then away it goes. So you're going to be wrong occasionally. But if you do it like this, your P&L will slowly start to stop going lower, and then you'll go for a period of a year or so where it flattens out, and then it'll start to change and go upward as you start to understand more and more and more and more about what you're actually doing as a trader. Most people don't even know what the hell trading means and what it is. What it is you're risking some money to try to make some more money. But you can't just take random entries in the middle of this daily range. You won't make money. You will only lose money. You got to take those entries at the very, very highest probable areas. I still have the monthly support level on the Bitget account or on the Bitget exchange, and the monthly level on the Bitget exchange is slightly different than the monthly level on Coinbase. But that's the level I'm going to be watching from here on out. Because even though I am a day trader, I want to know what the higher time frames are doing and what time or like what period of that monthly candle are we in. Well, right now it's the 5th of October, so we know that we're only 5 days into the monthly range. So that could mean that this move up is absolutely a fake out move for the month of October. Even though the month of October statistically is a good month for Bitcoin, you are in a bear market. You are in a bear market that is controlled by whatever the Fed is saying and doing. So there is no reason to be looking to change that until the Fed changes their bias. So as long as we are trading under this line moving forward for the rest of the week, $19,985.62, that objective price point, we will be looking to be sellers at or around this price, depending on how today closes. If today closes under $19,985, tomorrow, not during the Asian session, not tonight, tomorrow, I want you to look for a test, a spike at the London session open up to 20345 spot 19. If you have an hourly resistance at or around this level, then use the hourly. Don't use the daily level. Use the top of the hourly candle, and that's where you're looking for short trades tomorrow. That is if you close here or under. You will be looking to sell around or at $20,345 because your bias is still bearish. If you get stopped out tomorrow and you get an expansion, then we're going to have to take a look at what we got going on here. What's changed? What's happened? We're going to have to dig into it and see what has changed, essentially. Because what you have right here is the makings of a very first monthly move up. And what we could be seeing next is something like that for the next several weeks. Down. Take out the bear market lows of there. And the SPX, Dow Jones, and the NASDAQ have already done that. Bitcoin has not. I want to be bullish on it, and this was the best hope that I had for bullishness today. Just didn't work out. Just didn't work out. It may later, but I'm done with the day. I will reapproach the market again tomorrow morning at 6 o'clock. And if there's a setup I like, we will take it. We will take it. So yeah, we'll see what happens. We should have really not wanted to be a buyer today, but it is what it is. You're gonna miss trades up. The DXY, this could be good though, right? I said I do not want to see it close above that. So if today closes under here, it's still gonna be iffy. But I think with the overall trend, with the overall narrative, with everything we got, you got to be a little bit more bearish than bullish. And that's just my opinion. Tesla's flushing. Yeah, we'll do that, and then I'm going to bounce. I got to go get my girl some breakfast and me some breakfast. Yeah, it just broke down. All right, another small little rule of thumb is if your breakdown candle puts the support or resistance level that you're watching about the midpoint of the range, that's a legit breakdown. And that is roughly about the midpoint of today's range, right? Yep, that's about middle ways. So that's a legit breakdown right there. Tesla's getting sold off. There's nothing to do on it. Don't be a buyer of it. You're gonna try to buy something when you don't really want to be a buyer. Your next support level to watch will be there, 233.07. If it's going to turn around, it might do it there. I don't know if it will or not. I never know what price is ever going to do. Y'all have a fantastic day. If you have any other, wait a second. What's the name of that indicator? I don't know what indicator. If you're talking about the volume profile, it's just a session volume profile. Where's the next NASDAQ support? NASDAQ support is going to be very similar to that of the S&P 500. Their support's very similar to one another. Use the bigger ones. You're coming into yesterday or last week's open. Support is down here. I guess since you made that a trap, you could revert back to this support. But if you start trading under 11,265, I would be targeting 10,963. If you start trading under this, I would then have a target of this. All right. If this holds, you could still say that there's a chance that this bull market rally finds support. You'll pretty much have covered the gap as well if you get down there. But I mean, we tried to look for bids today and it didn't work. You got a massive move to the downside. Where is the Qs? There we go. Right there. So there you go. Right there. That's where I said that would be the next place to look to watch for support. There it is. Right there. If you lose this, you're looking for this. If this holds, you could still see it rally. But I mean, everything else has lost all of the major levels. Not the weekly levels, naturally. S&P 500, same scenario. Last week's open and last week's close are going to be levels to watch. You still got a ton of room to go on the S&P 500 just to even get to that level. So it doesn't mean it will get there. You could absolutely find support here because it's an old swing high. Untested, in fact. Old resistance. There. So maybe it finds support there. It's not a big pullback compared to what you've seen this week. Or you could just simplify it. Look for a retest of the 50% retracement or the 618 retracement on this week's range. And if any one of these areas hold a support, you could potentially see another leg to the upside. And that would be a slick measured move. So we'll see. If we're down here, that'll be like the last chance for the bulls to hold it. I think you got there on Bitcoin. Let's go look and we'll wrap it up. I think we did. I got sidetracked. No, you didn't. You have not. There's your weekly low, weekly high. Let's just be sure about it. We don't want to do the complete low. We just want to do this week's low to high. Almost got to the 50% retracement of this week's range. This week. We don't care about last week, just this week's expansion. This is the week we had the advance. So if it's going to continue to advance, this is the last ditch spot where you could potentially see a support build in. And there's yesterday's close right there. Yesterday's close. Intraday, it acted as resistance. Watch this level for potential support. 19,633. You're in between the 50 and 618. So, and that's actually the yesterday's close. Or the day before's close, sorry. Yesterday's open, but this close. This was the first breakout candle. Yesterday's open. We don't want to see it trading under that. Trading under that, we're bearish. I'll still be bearish as long as you're under the monthly, probably. I won't look to short the monthly level, though. Right? If we close under the monthly, I'll wait for a retest of this for short entries. Closing above this may change that bias. I don't know. We'll see what happens tomorrow. Today's done with. There's nothing we could do today. It's over and done with. The move has already happened. You're probably going to just see sideways to down. Your open is way up there. So on the daily range, you've just had a nonstop expansion. So you could look for price to trade sideways to down. Probably close over in here. Or up a little bit. Maybe it closes up in here. But there's the first move up. There's the expansion lower. So look for it to trade like an upwards U. Or an upside down U. That's how price will trade the rest of the day. Crappy, boring. Garbage, nothing high probable in it at all. So just leave it alone. If you have any questions, drop them in the comment section below and I will answer them. You guys have a fantastic day. Next time I'll see the live public stream will be Tuesday. We'll talk to you then. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.